Revolutionizing credit scores, the new financial frontier. Imagine this, you're finally ready to buy that charming craftsman bungalow with the crooked chimney that's been taunting you on Zillow for months. You've got the down payment, you've got the steady income, you've even preemptively befriended the next-door neighbor's pug. But then, bam, loan denied. And not because you're financially irresponsible, but because of a credit scoring system that's about as up-to-date as a rotary phone trying to run TikTok. For decades, these arbitrary numbers have held the keys to our financial kingdoms. Want a loan? Credit score. Want a decent interest rate? Credit score. The good news is the winds of change are blowing, my friends. Thanks to groundbreaking innovations, the way we assess credit is changing, becoming more inclusive and real-time. All right, let's start with a little trip down memory lane, shall we? Back in the olden days, which in credit score years is basically anything pre-2020, your credit worthiness was determined by a handful of factors: payment history, credit utilization, credit age, credit mix and inquiries. Basically, the financial equivalent of judging a fish by its ability to climb a tree. These factors, tracked by the big three credit bureaus, Experian, Equifax and TransUnion, became the arbiters of your financial fate. Think of them as the three grumpy judges on a reality show you never signed up for. This system, while perhaps well-intentioned in its infancy, has some serious flaws, like the fact that it's about as flexible as a rusty pipe. It doesn't take into account things like unexpected medical bills or sudden job losses, and don't even get me started on the speed or lack thereof. Imagine trying to explain to a bank that yes, you may have missed a credit card payment 6 months ago, but you also just landed your dream job. This rigid, archaic system has left countless individuals financially stranded. It's like trying to squeeze a square peg into a round hole after you've already glued the round hole shut. Okay, so we've established that the old credit scoring system is about as user-friendly as a rabid badger. But let's really dissect the issues, shall we? Because like a bad relationship, it's important to understand exactly what went wrong before you can move on to something better. First up, the dreaded lack of transparency. Trying to decipher your credit report can feel like trying to crack the Enigma code while blindfolded and riding a unicycle. It's dense, it's confusing, and it's intentionally designed to make you feel like you need a PhD in finance just to understand your own spending habits. Then there's the glacial pace of updates. We live in a world of instant gratification. We can order a pizza with our thumbs and have it delivered by drone before we even finish saying extra pepperoni. But credit scores? Oh no, those bad boys take their sweet time updating, often lagging behind your real-time financial situation by weeks, if not months. And let's not forget about the limited scope of consideration. The traditional system primarily focuses on your debt, how much you have, how well you manage it. But what about your income, your assets, your earning potential? It's like judging a book by its cover without bothering to read the actual words inside. And perhaps the most egregious sin of all, the exclusion of entire demographics. If you're young, new to the country, or live a largely cash-based life, tough luck. The traditional system has no room for you. Chapter 3. The New Era. Game-changing innovations in credit scoring. But fear not, dear viewers, because just when you thought it was time to chuck your credit cards into a volcano and live off the grid, a new dawn is breaking. The credit scoring landscape is undergoing a seismic shift, and for once it's actually good news for consumers. First up, let's talk about the rise of AI-driven credit assessments. These aren't your grandpa's credit scores, folks. We're talking about sophisticated algorithms that can analyze massive amounts of data, including things like your income, your spending habits, even your social media presence. Don't worry, they're not judging your cat memes yet. This means a more holistic and accurate picture of your financial health. Next, we have the emergence of alternative data sources. Remember all those bills you pay diligently every month? Rent, utilities, phone bills? Well, guess what? They finally count for something. And the best part? Real-time credit tracking. With real-time tracking, your score can update as frequently as you update your Instagram feed. This is a game changer, particularly for those who've been unfairly penalized by the old system. Chapter 4. Fintech companies leading the revolution. Now, you might be thinking, okay, this all sounds great, but who's actually making these changes happen? Well, buckle up, because it's not the big banks you'd expect. No, my friends, the real heroes of this story are the scrappy, innovative fintech companies who are shaking up the industry like a caffeinated chihuahua at a dog park. Companies like Experian Boost and Ultrafico are giving consumers more control over their credit data, allowing them to add positive payment history from non-traditional sources like utility bills and streaming subscriptions. It's like finally getting extra credit for all those times you binge-watched documentaries instead of going out and racking up credit card debt. Then there are companies like Self and Kaikoff, which are making it easier for people with limited credit history to build credit responsibly. They offer secured credit cards and credit builder loans that report to the credit bureaus, helping you establish a positive track record without needing a cosigner. And hold on to your hats, because things are about to get really futuristic. We're talking about decentralized finance, or DeFi, and blockchain-based credit models. These cutting-edge technologies are creating a more transparent and secure credit ecosystem where your data is truly yours. This is a fundamental shift in power, away from the centralized control of traditional credit bureaus and towards a more equitable and accessible system for everyone. Chapter 5. How consumers can take advantage of this shift. Okay, so we've covered a lot of ground here. We've explored the dusty, cobweb-filled attic of traditional credit scoring. We've marveled at the shiny new tools being built by fintech innovators, and now it's time for the most important part: how you can actually benefit from all of this. First and foremost, embrace the new credit-building tools at your disposal. Sign up for Experian Boost, explore credit builder loans, and consider alternative credit cards that fit your needs. The more you engage with these new options, the more you demonstrate your creditworthiness in this evolving landscape. Next, become an active participant in your credit journey. Don't just passively accept whatever credit score the powers that be decide you deserve. Monitor your score regularly, dispute any errors promptly, and make it a point to understand the factors that influence it. Knowledge is power, especially when it comes to your finances. And speaking of knowledge, invest in your financial literacy. The more you understand about credit, debt, and personal finance, the better equipped you'll be to navigate this changing landscape and make informed decisions that benefit your long-term financial well-being. Think of it like learning a new language, the language of money. Don't put all your eggs in one basket, or in this case, all your credit history in one credit card. Explore different types of credit, like secured cards, installment loans, or even becoming an authorized user on a responsible friend or family member's account. This demonstrates a wider range of credit management experience and can help you build a more robust credit profile. Stay informed about the latest credit innovations. The fintech world is constantly evolving, with new tools and platforms emerging all the time. Subscribe to industry newsletters, follow financial experts on social media, and make it a habit to stay ahead of the curve. Don't be afraid to explore alternative lending platforms. Peer-to-peer lending platforms and online lenders often have more flexible underwriting criteria than traditional banks, making them a viable option for those who may not fit the mold of the traditional credit scoring system. The future of credit. Your score, your terms. So there you have it, folks. The era of outdated, rigid credit scoring is crumbling faster than a stale cracker under a toddler's grip. With AI-driven models, alternative data sources, and real-time tracking, their power is shifting back into the hands of us, the consumers. It's like finally getting the keys to our own financial destinies after years of being stuck in the passenger seat. No longer will these arbitrary numbers dictate our financial futures. New systems are emerging, offering a more inclusive, dynamic, and frankly fair approach to assessing creditworthiness. Now is the time to act. Start exploring these new credit-building tools, take control of your financial profile, and ensure that your credit score accurately reflects the responsible, financially savvy individual you are. The credit game is changing. Are you ready to play and win? If you found this information valuable, don't be a stranger. Hit that subscribe button and let's build a brighter financial future together.